I'm Ashton Addison from EventChain for Investment Pitch Media and the Crypto Coin Show. And today on Blockchain Interviews with Jonathan DeCarteret, the CEO of Bumper. Jonathan, welcome to the show, and it's a pleasure to see you again, and thanks for being here.
Hey, Ashton. Yeah, really excited to be here today. Thanks, man.
I'm really excited for Bumper, and this solution that you're providing in the DeFi space is really needed right now. There's not a lot of tools coming out. When DeFi started exploding last summer, and this is one of those tools that I think is going to be really necessary for protecting your capital and ensuring that you can keep those gains. And I'm really excited to dive into the details on how exactly you're doing that. And I would love for you to just kick it off for us to start here with a high-level overview of Bumper and how you got to creating this innovative solution.
Yeah, cool. So, well, listen, let me kind of be as clear and direct then. So, Bumper has just one objective. It is there to protect the price of your crypto assets. Now, how it does that is really super innovative and we think really clever and unique and ultra efficient. And the story for us started back about a year ago when we started to see the emergence of DeFi, right, to do some really meaningful things. And we decided to pivot our existing business to kind of look at that DeFi space. And we were just really interested in like, okay, you've got this really cool ecosystem with all this kind of composability and innovation that's flooding in. And how can we use that ecosystem to solve some of the biggest problems? And so we thought, let's start at the very top, the trickiest, most complex problem that has been around since markets began is how can we solve for volatility? And we came up with an idea that in its most childlike way, and this is the way that I think is easiest to get it into people's heads. Okay, imagine you own a Bitcoin. Okay, and you see the price of Bitcoin shoot up to say $63,000, and you kind of think, okay, that's quite toppy. I expect Bitcoin to kind of trace back down. So you protect the price of your Bitcoin at $60,000. Now, as Bitcoin does start to retrace down, as it goes through that $60,000 floor, you're swapped into stablecoin. So if it falls down any more, you can cash out, you can redeem at the $60,000 value, buy the dip, do whatever you want. But likewise, if the price recovers and pushes back up above $60,000, then you're swapped back in to Bitcoin again. So what that really neat childlike analogy does is it gives you all the downside protection, but gives you all of that upside gain. So it's the best of both worlds, right? The only problem with that childlike analogy, it just doesn't work, right? We modeled this about a year ago using hourly, minute, second, and tick data, and because of slippage, because of the extraneous costs of AMM fees and gas costs, they all combine to just wipe out your underlying asset that you're trying to protect, right? Especially when it's oscillating along its floor. It's insane the levels of deterioration you get. And so what we able to do, and this was in conjunction with a company called Blockcain, who designed and then delivered Haven, which independently pivoted into synthetics. But using their engineers and their architects together with our team, we were able to build a near zero slippage engine, which is at the heart of Bumper. And that's what allows us to protect the price of your crypto assets really efficiently.
Wow, that's a great intro, Jonathan, and that's really interesting. I didn't fully understand the difference between, obviously with decentralized exchanges, there's not as much functionality that can be executed with stop losses and different kinds of orders. And this seems similar to that at first, but now you're mentioning that, if the price goes back up, in your example of Bitcoin, if it goes back up above 60,000, on a regular stop loss, you would just be stopped out and you would be out of your position. And it's often that, there's a quick wick down and then it's back up to, 70,000 and all of a sudden you're out of your position. So to be able to protect that upside as well and can continue with that upside, I think makes a huge difference, right?
Well, we definitely see that with stop loss. It's a one-way ticket, isn't it? If the market takes a dive, that's it. You're cashed out of your position. And the problem with that, from what we can see from a more kind of micro level, is there are a lot of bots out there that are gaming these movements. So they're there to kind of just push you out of your position and then kind of buy the dip very quickly to kind of get that rebound. And so, when you look at the other options that are out there in the marketplace to give you protection, right? Stop loss is obviously a good, a circuit breaker. The other one is obviously options desks, right? Which have been used in traditional finance since 1973. That's almost a 50-year-old technology that we're using, right? And it's unbelievable that nothing has come along in the interim period that can offer a more efficient way to kind of give you some kind of hedge. And there's a reason for that, is because traditional finance is just relying on that really old school infrastructure. And coming back to our original investment thesis on our side was that because DeFi and crypto is so fluid and so automated and so natively smart, we're able to do things in crypto that you just can't do in traditional finance. And that's why we've been able to create something here that is totally novel and new. And, you compare it to an options desk, which, in my view, they are clunky, they are expensive, they have fixed expiry windows, they're complex. What we have with Bumper is a really easy to use app that in 6 clicks, you set the price you want to protect. You hit that button, that's it. You can be protected for as little as 3% per annum. So just think about that. That is $30,000 a year to protect $1 million worth of Bitcoin. It is a game changer.
I agree, Jonathan. And as you mentioned, when DeFi started kicking up last summer, to have this kind of idea and to make it so simple, I think what I'm seeing is that sort of the unique competitive advantage with Bumper is just like protect your assets. It's the one-stop shop to do that. There are other tools that are trying to create, order books functionality like limit orders and stop limits and things like that on top of decentralized exchanges. But I think the simplicity is going to be one of the things that's going to help drive adoption to something this simple, because especially with DeFi, on the downside, there can be a lot of volatility, especially because it's sort of tied to the major coins and everything sort of moves at the same time. Do you see that simplicity as sort of your number one competitive advantage in getting people to actually use and adopt Bumper in the long term?
Yeah, for sure. I mean, I think from the get-go, once we kind of figured this thing out, what we realized is we really wanted this to become a retail product first, right? So hence the name, right? Bumper. It's kind of friendly. It's a little bit, kind of has an accessibility to it. It's not scary. And when we designed the scoping and architectural design for Bumper, right, which took us 9 months, at the same time we worked with designers on the DApp because we wanted it to be really easy to use. So when you'll see our DApp, which is going to kind of, the first part of the protocol launches in 3 weeks on June the 22nd, you'll see just how intuitive that graphical user interface is, because let's be honest, in a lot of DeFi protocols it's not, and I think they do that on purpose to make it a little bit for the for the more kind of geeks in all of us to kind of utilize. But Bumper is made for the masses. And then when you think about this protocol, obviously there's a strong retail play. There's a massive play for those professional crypto traders that are out there, right, that have a fiduciary responsibility to take some kind of hedge. Then there's a huge opportunity for the inter-DeFi protocol play. So this is where you might have a Yearn ETH vault, and that ETH vault is protected at a certain price, so it will never drop below that price. And we're really trying to position ourselves just to be that default protection Lego block that just plugs into all the other DeFi protocols, as well as retail, as well as institutional.
Definitely. And I was looking into the launch that's coming up. I'm excited to actually try it out myself. And I saw that it also integrates the Bump token within the platform, and that's sort of utilized to help execute the protections. Can you talk about that functionality? Is there any other functionality for the Bump token within Bumper? And does it create a sustainable ecosystem overall for the participants?
Yeah, listen, we consider ourselves very careful and considerate designers of protocols and tokenomics, right? So again, from the very first design layer, we really thought about, okay, what are all the different use cases of that Bump token within the protocol, and how can we leverage that to ensure that value is then concatenated time and time again back onto that token value. So to put that into context, right, a user, any actor, needs to deposit Bump to the protocol in order to start using it, right? Then if you are a protection taker, you can opt to pay your premium, the fee that you pay, in Bump. if you're somebody who's put in USDC into the protocol, who is making protection, you can elect to receive your yield in bump token. Then every actor in the protocol will receive a daily distribution of the bump token to incentivize them to kind of bootstrap network effects. And we're just finishing off the model to allow people who hold significant amount of bump to stake that into the protocol to increase the robustness and the efficiency of the model. And then, of course, the cherry on the cake is that bump token is the governance token. And this is a DAO by design that will be moving very swiftly to community governance. So there are about 5 or 6 different utility cases that we think will absolutely sustain the token price and its utility within the ecosystem.
Mm-hmm. Yeah, I like how it's used on both sides for the makers and the takers there, and I'm excited to see the launch you mentioned coming up very soon. I know this is version 1A that's coming out, and that's not the full functionality. I know you're going to be building it throughout the rest of this year. What is coming out in this first launch?
Yeah, well, listen, we have a phenomenal team of coders and developers, right? Which is difficult at this time when the market's pumping to find really good people to be really committed to one project. So we have on June the 22nd the first release of Bumper. Now, what that allows people to do is to deposit USDC into the protocol. Now, if you're the first person to do that on June the 22nd, you will be expecting a APY in bump tokens of 400%. And that will run all the way up until mid-September, which is when the second part of the protocol comes out. And that's the whole thing then goes live. And what we've also kind of added onto this, and I think this is again speaks to our kind of level of innovation that I think we're just kind of really honing in on, is that if you do deposit that USDC on June the 22nd, then that also allows you to convert some of your USDC into bump tokens. So you get to buy that essentially at a private sale price. And then at the end of that period, so this is kind of coming up towards that September launch, we will have a pre-sale. And again, that will only be open to people who've deposited USDC, and they'll be able to buy that bump token before it kind of goes on a public sale and lists on exchanges. So what we're trying to do here, and this really speaks to our ethos, is, this is a protocol that's going to be around for 10 years plus. So we are only interested in people who want to support the protocol over the long term, who are committed to it. And that is emblazoned by our vesting schedule. So we had an institutional round that we conducted back in March. We were hoping to raise $500,000. We raised 11.3 million in a month. We declined a further $32 million worth of investment. All those investors, VCs and the team and the founders are all locked up in an 18-month vesting schedule. And that speaks volumes to, the kind of the long-term view that we and our stakeholders have in this protocol.
Definitely, I saw that raise, and it's very impressive that you had to turn down 3 times the amount of money, oversubscribed, because this is obviously a solution that is very needed in the DeFi world, and these people can see that, and it's exciting to have all that backing and be so close to the launch here, and to have the long-term interest of all these investors. And yeah, I think that everyone's on the same page when they see that we're still at the beginning of DeFi, and it's going to be years down the road that this is going to continue to grow. And so with that, what do you see as one of the main key factors to success way down the road, so that your investors 10 years down the road will be still with you and supporting the platform, and hopefully it will be exponentially widespread and adopted?
Yeah, well, that's a really good question, isn't it? Because I think when you kind of look at the macro picture with DeFi, right, then what I feel has happened is if you look at fintech overall, then over the last kind of 10, 20 years, what it's done is it's taken traditional finance and it's just kind of automated around the edges, right, and kind of made that easier to work and to use, right? But nothing fundamental has changed within the plumbing of traditional finance. What DeFi does is it will just eat traditional finance from the inside out and just totally replicate it, right? And we're starting to see the beginnings of that, right? This is the flint of an absolute revolution in how financial instruments and structured products interact with each other in an ultra efficient way. And where we see Bumper being a part of that is really leading that kind of innovation curve, right? So to answer your question, right? So for those investors in 10 years, like what is Bumper going to look like then? Well, we've got some ideas of where we want to go, right? So at the moment, this is a DeFi play, right? This is the hardcore of Bumper, right? So at the beginning, we're starting off just with ETH and USDC. They're the pairs that we're kind of balancing together. And then in release 2, which will be coming out in Q4 this year, and we're already starting to scope and design that, is all about expansion and extending that out. Right. So on the unstable asset side, we'll be expanding to all the larger cap ERC20 tokens and wrapped Bitcoin. On the stable side will be multi-denominated stable coins, so USDC, T, DAI, so forth. And we can come up with some really clever things there where we can have one really big stable coin pool and then lots of unstable coins that are all kind of being balanced with that larger one. So which makes it super efficient. Then obviously we have kind of interoperability into different chains, so kind of looking into Binance Smart Chain, for instance, and obviously layer 2 mechanisms to speed up. Then we'll be running in straight into the staking of ETH, which will hopefully kind of bring down the gas fees and kind of give us a higher transaction speed. And then you kind of start to branch out a little bit out of DeFi. So you kind of start thinking about, well, can we take traditional equities like Tesla, like coin, tokenize that, and then Bumper that? And that it can do straight off the bat, right? So there's no problem with incorporating that. And then you start looking at things like collateralized debt positions, right? Which if you want to borrow, if you've got ETH and you want to borrow ETH, then you'd obviously deposit the ETH that you have in order to borrow more. But the ETH you've deposited, because it's unstable asset, is liable to get liquidated out. If you bump your ETH, that's impossible. That will never happen because the protocol will always stand by that floor that you're protecting. And then you start to move into the traditional world. And this is where we think, kind of circles back to the point about DeFi eating traditional finance inside out, because what we will be able to do is create an institutional version of Bumper. So that's where there would be a KYC, AML filter on each end so that everyone knows they're interacting with kind of qualified entities. But there is nothing to stop us taking any bond, any stock, any equity, any derivative in traditional finance and start to Bumper that. So this protocol's got a huge roadmap of where it can go.
Very exciting and a lot of potential as we continue to eat up the traditional financial world with DeFi. So very exciting, Jonathan. Thank you so much for taking the time to come on. For the viewers that are looking to follow this version 1A release and get on Bumper right when it comes out here, what's the best way for them to get involved?
Yeah, thanks, man. So Bumperfi is our website. So just go there, just register, and there'll be an invitation sent out on June the 22nd when the protocol goes live for you to deposit USDC, and then you can start earning Bump. You can buy Bump and be part of the movement.
Sounds great. I will leave that link for Bumperfi in the description box below. All the best with the upcoming launch, and let's follow up in the near future.
Thanks, buddy. Take care, man. Thank you.